expansion, revenue optimization, strategic planning, as well as customer service excellence. Mr. Tola brings a wealth of expertise in driving revenue growth, expanding market reach, boosting brand equity, as well as fostering a results-driven culture. He has spearheaded innovative commercial approaches, market penetration initiatives, and customer-centric transformations that have delivered substantial business outcomes. Before his current role at Mixta, Mr. Tola has served as Managing Director for Mixta's Africa's West Africa Francophone operations in Senegal and Cote d'Ivoire. His real estate career highlights include securing financing for affordable housing projects and successfully negotiating with international development finance institutions. He managed major developments like Lakwe Lakes Golf, everybody knows that, and Country Estates, as well as Adiva Plainfield residential projects. He was also part of the development team with Sobana Jurong in Singapore, pardon me if I didn't pronounce that well, to develop the master plan for the Lagos New Town site, a 1561 hectare live work-play development along the Lekki-Epe Expressway. He's a strategic thinker. He has led in investment analysis and portfolio management, and he has executed key public-private real estate initiatives, including the Oluwole urban markets with the Lagos State government. He recently served as a member of the implementation team of the recently launched Ministry of Finance Incorporated Real Estate Investment Fund, MREIF. So if you're hearing MREIF is also one of them, a mortgage-focused intervention fund. The MREIF has successfully raised 250 billion naira under its Series 1 and 2 fundraise, with plans to raise up to 1 trillion under its current rollout. He has cross-functional expertise spanning investment, development, asset management, and proven track record, which make him an authority in emerging real estate markets with cross-cultural fluency. Now, beyond his professional accomplishments, he has founded the Workplace Multipliers Business School, a training platform that is for career professionals that want to win at work and in life. His clients include career professionals across Africa, Europe, and North America. And is also the author of several articles and publications, including Winning Beyond Borders, Achieving Success at Work and in a New Country. It's a comprehensive guide for professionals that want to excel working in a new country or working with other professionals outside of their country. Oh my God, this is one person's portfolio. So I want you guys to really just give a round of applause for Mr. Tola here with us. It's a pleasure to have you on board, sir.
Thank you very much. It's a pleasure to be here. Next time, I'll give you the abridged version of my profile so that I don't look embarrassed while you are reading everything out.
No, it's the work of your hand, and of course, you should be proud of it. It's a pleasure to have you on the call with us today. Yes. So, just before it comes on board, you have seen his portfolio, and I'm sure you can see that there's a lot to gain from having him on board with us today. So I'm just going to talk about Ule Homes, because obviously we are the ones organizing or hosting this particular learning series, and what we do and why we have him on board with us today. So Ule Homes is a rent financing company, or would I say we started off as a rent financing company, and over the past 1 year, we've been able to successfully fund and disburse millions of naira to Nigerians across all 36 states of Nigeria. And as time went by, we decided, okay, how about we expand and see if that's going to work? And funnily, we realized that, okay, a lot of Nigerians also need the rent to own, or even outright buying to own apartments. And so we decided to go into mortgage. So aside just mortgage, we realized that our customers don't even know about their credit scores. So how can we help our customers to be able to build their credit scores, so just in case they want to get funding at any point in their life, so that it's not like, oh, they have to get finance but they didn't even know that their credit score, or they are not credit worthy. So this is what we have been up to for the past 1 year, and that's what has really helped us to be able to secure partnerships across different sectors in real estate, in finance, and in this case as well, mortgage. So we're really excited to have Mr. Tola, and we are going to be opening the floor for him to say one or two things to us. Thank you. Over to you, sir.
Okay, thank you very much, everybody, and congratulations to Ule. I had the pleasure of meeting one of your co-founders, and proud of the work that you guys are doing. So thank you very much once again for the invitation and the opportunity to speak. Is this where I go straight forward to sort of like starting my conversation?
Oh, yes, sir. Thank you,
Okay,
sir.
okay. Please, I hope it's possible for me to share. I just have a few slides I'd just like to share. Just something that we can all come around the conversation. So I hope I'll be able to share my screen.
Yes, please.
Okay, good. Let me just try and do that quickly. Okay. Okay, that's interesting. Okay, good. Yeah, found it. Okay, please, I hope you all can see my slides. Good. Okay, so thank you very much. So
Yes.
just to let you know, it's not going to be a long, extensive conversation, no technical diatribe. I'm just going to make it simple and conversational, just something that we can come around in terms of the rest of the conversation we're going to be having today. Okay. So, today's conversation is for you if you're a young professional who's just not been able to get a home because of the property prices you've been finding. If you're a Nigerian in diaspora, there's an opportunity for you to play in my presentation. And if you're currently renting and looking for the opportunity of going outside of renting and actually owning your property, yes, today's presentation is going to serve you. And if you're just one person who's heard about MREIF, but you want some insider clarity, like you heard in my profile, I had the privilege of being part of the implementation team to start this thing up. So I hope to give you a bit of insider clarity. But before I go forward, I'd just like to ask a quick question. So what's your current biggest barrier to home ownership right now? So I have 4 options. And all you have to do is in the chat, you just have to indicate A, B, or C, or A, B, C, or D. So A, number one, you're in terms of biggest barrier to home ownership. Number one, that's A, can't afford the current property prices. B, can't find affordable mortgages. C, worried about the job security / long-term commitment. And then D, don't think I qualify for affordable mortgages. So let me see on the chat, let me see. So is it A, can't afford the current property prices? B, can't find affordable mortgages? C, worried about job security and long-term commitment? And then D, don't think I qualify for affordable mortgages. So, okay, I'm seeing responses. I see D, C, okay. Let's see. I'm seeing A and C. Oh, interesting. Someone is saying A and C, and someone is saying C and D. Interesting. Interesting. Okay. So that's very good. C and D again. Okay. That's very good. A and C. I see. Okay, good. Thank you very much for all your feedback. It basically tells me that I've got the right audience and this conversation is going to be pretty useful for you. Today's conversation, I'm hoping that by the end of my time with you, we would have been able to deliver. I would have been able to deliver on these 5 outcomes. One, a simple way for you to own your home using the MREIF, a clear understanding of how MREIF actually works, and it's not what most people think. It's interesting, the sort of questions I've had to answer and find out that people don't completely understand what the MREIF is. So you're going to get the complete understanding of how the MREIF works. Confidence in MREIF stability. I know that's one of the things people fear about. Oh, is this MREIF for the long haul? You're going to have a bit more confidence in that. And you should be able to build a realistic timeline for your home ownership and actionable next steps that you can take next week. That's what I'm pushing for, that you can actually start taking action. So let's come to the story that we're all familiar with. Yes, Nigeria has 28 million housing gap. We all know that. That means housing gap huge, and the money required to take care of it is also huge. Now, the historical pattern we're all used to. There have been promises. When I was growing up, there was Vision 2000. Later, it became Vision 2010. Later, Vision, all this sort of thing. And the housing for all seems to be the story that has never been fulfilled. The big pattern, the regular pattern is a big announcement, limited funding, and minimal impact. And so the real question everybody is asking is, what makes MREIF different from failed past initiatives? Well, first and foremost, MREIF is not your typical government initiative that is owned and warehoused by the government. It's a market-driven, private-public partnership structure. That's the way it operates. And just as a testament in terms of how it's going to be executing itself and rolling out, it's a you've got combination of funding from the federal government. The federal government has invested in a tranche as much as 150 billion. Private sector was supposed to invest just 100 billion, but that 100 billion tranche was actually oversubscribed, which actually is a testament to the private sector believability in terms of this fund being able to actually deliver on its objectives. And the private sector that I'm talking about, you've got PFAs, commercial banks, insurance, big institutional players who believe in the structure of a marketable commercial grade instrument. In terms of regulation, it's regulated by SEC, and it's professionally managed by ARF. That's also a portfolio manager that is also regulated by SEC. And the purpose, the big picture story for it is this: offer 20-year mortgages at 9.75%, which is down from the original rate it started of 12%, requiring 10% equity, which was also down for the original, which started of 20% equity contribution, for up to 100 million. Now, the key differences between this and previous initiative is that it's got a sustainable funding model that recycles repayments. Now, that still doesn't make sense to a lot of people from what I found out. And one of the ways which I found it easy to explain the funds to people is actually using something that they are familiar with. And so I know the most popular intervention in terms of providing mortgages that the government has done historically in Nigeria is the NHF. And so one of the ways in which I find it easier to explain to people about how the MREIF works is to use the NHF model. So the NHF model and the MREIF model, very similar. The primary difference between the NHF, some of the core differences between the NHF and the MREIF is that, unlike under NHF, whereby you need to be a contributor, and contributions is actually one of the regular sources of funding which the NHF gets. Under the MREIF, you don't have regular contributions. The bulk of how funding comes from the MREIF is that they actually go and raise capital from government, from bilateral agencies, from institutional investors. They raise that funding, pull it together, and then they use the funding to actually raise, to issue mortgages. So it's sort of like a reverse cycle whereby there's funding available, and what they're basically trying to do is they're trying to look for mortgages. So it's not a case of, oh, we need people to contribute before we can have money to get mortgages. No, the MREIF does the hard work of trying to get investors. Once it starts getting investors, then it has money to be able to issue mortgages. The additional thing which the MREIF has done is that instead of just restricting its lending chain to just mortgage banks, it has extended it to include commercial banks. Now, you ask me, why did they decide to do that? This is largely as a way of ensuring the sustainability of the fund. Before you are, whether as a commercial bank or a mortgage bank, before you can actually partner with the MREIF to actually issue mortgages to people under this scheme, there are a couple of matrices that you need to meet. And one of the key matrices that you need to meet is the level of your share capital that you have. So based on your share capital, they'll be able to assess how much funding you can access under the MREIF. And for most of you, you're all familiar with most of our mortgage banks don't really have that huge share capital to be able to carry a huge chunk of the funding that the MREIF is going to be providing. And that's the reason why they extended it to commercial banks. So the long and short is that you actually have a broader chain of institutions that you can access this mortgage from. It's this structure that ensures the long-term sustainability of the fund, such that you don't have a situation whereby mortgages are issued to people without taking the necessary due diligence, and then the money basically gets lost. by making sure that the institutions that are responsible for issuing mortgages actually recognize the fact that their share capital might be impaired in the event that they issue the credit to people who don't have sustainable means of income. It forces that level of rigor in the whole process. So in terms of sustainability of the fund, this ensures long-term sustainability of the fund. The other additional thing which I'd like to point out, which in terms of when the fund was being conceptualized as a structure, the question which was asked was that, look, what's the most successful structure that you have at this point in time that has successfully pooled funds and ensured that these funds have lasted the long haul? This is largely at this point in time, PENCOM seems to be the pension fund industry is one of the most successful reforms that the government has done that has successfully done that. And so what MREIF just did was it simply just replicated that structure. So you got the portfolio manager who's responsible for managing the funds, but the portfolio manager doesn't hold the funds. It's the responsibility of the custodians. The custodians are the ones that hold the funds, and they hold the funds on behalf of the trustees, because the trustees are the ones who are acting on behalf of all the institutional investors, the governments, bilateral agencies that have invested in the fund. So that structure ensures that, look, for as long as the fund is going to remain in terms of having a life of its own, it's protected. It's protected by being, as it were, taken completely out of the arm of the government. So in this particular case, it's not regulated under Ministry of Housing or Ministry of Finance. No, it's regulated working with SEC guidelines, just like the pension fund is regulated using the PENCOM guidelines. And just so that you just get a sense of how the MREIF is, so far, you can see a basis of evolution. When it opened its doors to issue mortgages to people, initially interest rate was at 12%, and then the equity contribution was 20%. But based on it being able to adjust to some of the levels in the market, it was able to adjust rates down from 12% to 9.75%, adjust equity contribution from 20% to 10%. And this is largely on the back of having private sector being involved in that process, whereby ARM, who's the fund manager, is actively looking at how the market is responding, how the various levels are being adjusted, and using that as a basis of moving interest rates here and there. I know people have asked questions that, look, do we envisage a world whereby it might be possible that the interest rate might go lower than that? Well, that's left to the portfolio manager as they assess the market. Overall, MREIF's role is not as a competitor. You can see one of the things I've tried to do is just tell you all the parties that MREIF is working with. Is basically working with the parties that are already used to the process of issuing out mortgages. So it's basically complementing what already exists in the market. NHF is still going to continue operating. It's not competing with NHF, but it has to have a structure separate from NHF, which works for the investors, for the people who are bringing funds. You know, the problem here is that the people who want to bring funds for mortgages, they don't want to invest in the NHF structure, because under the NHF structure, it already has people who have been contributing who have not been able to draw down mortgages. So that means it has outstanding liabilities that it needs to source for. So they need to know that, look, whatever money they are bringing in is not used to cut old liabilities, but being used to create new assets. And that's the reason why MREIF had to be set up as a standalone structure. Just think basically that, look, the MREIF is trying to catalyze the whole industry. And beyond addressing the finance issue, it's also going to be engaging in some of the systemic barriers that you have. So the MREIF already has started engaging with state governments on having digital registries, just to make the whole process of verification of assets. Because one of the fees which institutions charge and some of the delays to the process is when institutions have to verify title, have to go through all the land rates. So those are some of the things MREIF is trying to do. In addition, it is also working with select developers to provide offtake guarantees for those developers so that they can use it to raise funding to do construction. The whole idea here is this: it's no use having a fund that can provide mortgages if there are no homes to actually offer those mortgages for. And that's the reason why the MREIF is also doing that. In terms of what the MREIF has done so far, it's issued about 624 mortgages. That's within 6 months. And I know it's on track to give or take by the end of this month, which is just in a few days, to hit about 750. So there's a lot of progress, and the 750 are 750 Nigerians who are getting access to mortgage to be able to own their own property. So I'm sure the most important thing to every one of you guys is, how do I get my mortgage? Well, I have what I call my 7 steps to achieving, to accessing the MREIF mortgage for your property. Find a property you like. You can either do that using the MREIF website, or you can find any one of the properties that you like. It doesn't have to be on the MREIF website. It's just that MREIF has just also decided to be a market maker, not only waiting for people to start looking for properties. It has engaged with different developers, listed those properties on their website. You can engage with those developers, carry your own checks if the properties match what exactly you want. Let's imagine the developer you met with is a developer that is not on the MREIF website. You need to confirm that the developer accepts mortgage payments as the basis for exiting, as the basis for you procuring your property. Once you've been able to sort that out, you contact any of the approved financial institution, submit your documents. The bank requests for the typical credit verification documentation. You make your down payment. It's the bank that is going to request for your mortgage funding from the MREIF. You're not the one that has to do that additional work. And once the MREIF does that and they're satisfied with the bank's request, which it takes like about a week, within a week or less, they can disperse the fund. The bank pays the developer and you get your keys. And if you like it looking pictorial form, this is it. Just simplified to make your path a lot easier for you in terms of how you can own your own home under the MREIF scheme. I know some of the challenges that people have with regards to taking mortgages, that, hey, supposing I change my job, it doesn't really matter. What you have is you have a mortgage on the property. So even if you change your work, the terms still remain. It's not tied to your current employment. It's tied to your ability to meet the terms of the repayment under the mortgage. As long as repayment continues, everything continues. If you lose your job, yeah, there are, most of the institutions will ask that you take an insurance as part of the process of getting your mortgage. There are also restructuring possibilities that you can always explore with the lender. Now, if push comes to shove, you can actually sell the asset, recover your equity, and whatever it is, the bank takes the rest of everything. Bottom line here is this: you have 2 choices. You can continue to pay rent, and at the end of payment, you don't have anything to show, or you can make that effort to actually get into a mortgage. And what you're doing is you're building your own asset, whether in form of the equity you're building into the asset. So what can you do today to actually get you on the track? So number one, you can go and check out the MREIF marketplace. Like I said, list of properties, have a look at them. Whichever one makes sense to you, you can choose it. You can also talk to your bank. At the moment, you have Access Bank, Stanbic, FCMB, Union, and Providus Bank. Now, for the mortgage banks, I'm currently silent on them at the moment. And the reason why I'm silent on them at the moment is currently the mortgage banks are currently been suspended by PENCOM from accessing the 25% RSA balance for the purpose of making your equity contribution. There's an issue the mortgage banks have with PENCOM. So until they resolve that issue, if you are someone who wants to get a mortgage using your 25% RSA balance, then I would recommend you speak to the commercial banks at this point and not the mortgage bank until the mortgage banks are able to resolve the issues they have with PENCOM. And very importantly, if it's possible for you, you can actually start the path towards building your 10%. Just remember, it's not MREIF that lends directly to you. It's your bank that does that. MREIF just provides the funding for the financial institutions to be able to do that. And so with this, your home ownership timeline can change from some day in the future that you're imagining to whether it's 2 years, whether it's 3 years, you actually have a definite timeline that you're working with. And like I said, you already have 624 families that have moved from being tenants to owners, and you might be the next set of people that will be getting onto that ladder. And opportunity has been opened with affordable rates, reduced barrier by having just 10% equity contribution, and a proven structure that guarantees that more than just the 20 years of the life of this scheme, you're going to have a sustainable scheme that continues to run on and on and on and on. Thank you very much for your attention. That would be the end of my presentation.
Wow, thank you very much for your presentation. This is so enlightening. I've also gotten to learn so much. I mean, by next year, you guys don't be surprised if I own my own home. So it's not only Uleos that can do it. So yes, thank you so much for the opportunity to do this. There's one thing that I actually took out of this, and it is that MREIF would provide the funds, and the commercial institution, in this case, Ule Homes, would help you to provide to pay for the mortgage. So there are a couple of questions that I got, and I would just like to just if anybody has any question for Mr. Tola, please drop it in the comment section. Um, this was a really enlightening session for me. And the part of, most people are always scared about, okay, so what if an individual lose their job? So yes, you have the assets, you might as well just sell it. And of course, you can decide to restructure your payment with the financial institution, and also they ask the individuals to do some form of insurance in case of any unforeseen circumstance. Okay, so I'm just going to go ahead with the questions that I have here. And MREIF is a significant step towards making home ownership accessible to Nigerians working middle class. But what specific criteria is used to define the working middle class, and how will MREIF ensure that it continues to reach this demographic as the economy changes?
Okay, so I think first and foremost, one of the things which was very important to us when we were envisioning the MREIF was that you wanted to make sure that the mortgages goes to the target group that really need it. Interestingly, we actually started mortgage value from like 55 million. We were like wanted to cap it from 55 million. Primarily because the NHF was doing at 50 million, so we were like something slightly above. But what we had to do was we had to take a sampling of most of the property prices that you have in view of the inflation that has happened over the last 3 years. Because of that, that's the reason why we had to raise the maximum cap of the amount that people can borrow to about 100 million. What we are hoping is that at 100 million cap, that's what I would say, at 100 million cap, you will be able to get a significant portion of people within the middle class. And to be honest with you, I'm someone who studies the markets, and I know that over the last 2, 3 years, the middle class has significantly shrunk for obvious reasons with the inflation and everything. And what you find out that the bulk of people who are actually looking for housing have now dropped to social housing rather than affordable housing. So I can understand that perspective. The way we've tried to sort of mitigate around that is just to try and position the cap of the mortgage that you can get to just that 100 million. We believe that at a property price at less than 100 million, it might be possible for you to get a bigger chunk of people within that range. Instead of, and of course, I'll tell you, I understand what that effectively is. That means that you might probably not get houses within the city centers. Yeah, that's
Yeah.
the reality of it. If you want to get houses within the city center, you have to pay a bigger premium for those sort of houses. Those prices are priced a lot higher. So and the way in which we thought about it is that, look, don't look at the mortgage that you're getting for your property as the mortgage that you're going to get for the property that you're going to own for the rest of your life. There's nothing that stops you from getting this mortgage, get your first property, and then later on, as you go into the future, you might decide you want to sell that property, and then maybe your income has moved further, and then you can get something a lot bigger. So the way in which I tell people is that, look, don't think that this is the one property that you're going to buy for the rest of your life, that you're never going to buy any other property. Just try and get on the ladder. It might be a smaller price. For example, I know that on the further part of Lekki Expressway, you actually have properties that they are selling for about 40 something million. Yeah, it's not in city center, but if you want to get yourself on the property ladder, that might be a way of you to buy that asset, get on the property ladder, and you see how things evolve into the future. I hope I've been able to address that question.
Yes, so that makes sense. But just one thing that I took out that I wanted to ask. So
Yeah.
you mentioned a bigger premium. So is there a chance that there might be a chance that it extends over 100 million naira.
Well, it's likely, so let me tell you, it's likely for the first tranche that we're running that it won't go past 100 million. And I'll tell you the reason why. We rather prefer that this thing serves plenty of people rather than serving a few people that can actually gobble up the whole funds. So that's it. Because, for example, don't worry, there were discussions about, okay, should we raise it to 200 million? You raise it to 200 million, that means that fund is going to serve half of the people it ordinarily would have served if you had still capped it at 100 million. And it's very likely that trusting your financial institutions, they probably will go with people on the very high end of the
Right.
market as a way of just, keeping their portfolio of high net worth individuals. So it's not impossible, get me right. As the fund is able to raise a lot more funding, there are multiple chances. Like I said, this current series or this current run of the program, you registered a 1 trillion instrument. We've only done 250 billion. There are still other tranches that will be raised. It's not impossible as we raise further. I said as we raise, as the fund raises additional tranches, it might be able to raise the limit from, it's all a case of if I have many more funds to play with, then I'll be willing to expand the maximum cap I'll be willing to give people. But the most important thing at this point in time is to make sure that a lot of people have access to that fund.
Okay, that's great. Okay, we have more questions coming in. So Peter is asking, from the perspective of a young professional, how can this proven model give them confidence that MREIF will be a stable and reliable partner for the next 20 years of a mortgage? Does MREIF cover an off-plan mortgage solution?
Okay, so first and foremost, to the long-term sustainability of the MREIF. And like I said, we try to lean in using structures that have already been successful. The pension fund reform was done 2004. This is 20 years, over 20 years later. That structure is still up and running and still successful. I mean, there's nobody here who is afraid that tomorrow something is going to happen to your pension. You have that confidence and assurance. And that's the reason why we decided to replicate that model that already works. So if you already have a test case that has lasted for 21 years, then that should give you assurance that the MREIF also is a fund. I mean, has a structure that can last for that your 20 years that you are looking at. And I mean, I can tell you that, look, at this point in time, that structure is one of the reasons why it got an investment grade rating. You know, the typical thing, there is no private institutional investor who is going to invest if it is not an investment grade instrument. And so because of the structure which we have, that was one of the, and he was able to get an investment grade rating. That's the reason why a lot of private sector invested in. So all I'll just tell you is this: look at the pension fund. Pension fund is still up and running more than 20 years later. Let that give you comfort that MREIF is going to go the long haul. Yeah. And then
Okay.
to the other question you raised about off-plan, whether you can do off-plan, that largely depends on the financial institution. So I know there are certain financial institutions that at the point where you are entering into an off-plan arrangement with the developer, what they will do is they will simply just assess you. They will assess you, do their typical assessment, and then tell you to start making your equity contributions. They may now decide that at a particular point in time, even though if the home is not fully complete, if the evaluation shows that what has been completed is larger than, is in terms of value, is larger than the value of the loan that you want to get, then they would issue that first, they would go ahead and issue that mortgage, even though the home is not fully complete. So that's the way in which they also try to manage their risk, because it doesn't make sense for them to give you a facility whereby the value of the assets that they are tying that facility to is lower than the facility. So that's the way in which financial institutions try to hedge around it. So the long and short of it is that you may not get mortgage in the way in which you expect, in terms of, okay, because it's off plan, as you're going to be making your expected payment, you have to be doing it. And what I can tell you here is that you actually have a couple of institutions at the moment now that are doing it. So the way the process runs is that you go and you've seen a developer, the developer is starting his construction, you get an offer letter from the developer, a developer signs off, everybody is good with that. You take the offer letter, you take it to the institution that, hey, this developer is developing, the property is going to be ready in 12 months. Based on this offer letter I have from them, I want to start making my equity contribution of 10%. please, can you start the process of checking me out for credit? And then the bank says, okay, no problem, just go ahead, make your equity contribution. And then at the end of the 12 months, all they just do is they come and assess the property. Once the property meets it, they pay it. So the only thing you are worrying yourself about is just the 10% equity. You don't need to make anything as long as the developer is okay with it. And there are developers that are willing to take that bet on you.
Okay. So it's left for the customers to actually find a developer that is willing to do that for them.
Yeah, and I mean, and I know I'm not making a sales pitch for my institution, but that's something which we do at Mixter, whereby we actually have people in which when we want to start developments, they actually come in and we actually give or take between about 6 months to even make the equity contribution. So it's not immediately you have to make it. You make your equity contribution over 6 months, and then during that 6 months, the bank is doing your assessment, doing your check, and then when the property gets to that point where the banks can send somebody to assess it, they value it. And once they value, they close your process and then they pass it on to the MREIF. Yeah.
Okay, that's great. There are a lot more questions that are going up in the comments. Let me take one more, and then I'll open it up for people that wants to make comments. Okay. So says thanks. Okay, so his question is, Olan says, I would like to know the roadmap for people in diaspora.
Okay, people in diaspora, pretty lovely question. And the beauty about the diaspora is that you actually have a couple of institutions that have started doing diaspora mortgage lending. And some of the institutions that I've listed out are actually institutions that do diaspora mortgage lending. I know Access Bank, just take it one at a time. Access Bank does diaspora lending. Providence Bank also does diaspora lending. Now you're asking the process for how. Each financial institution has their own process. So I can't speak into detail in terms of how their process works, but I know there are different things which they ask for. I don't want to go into each institution has individualized information that they request. So depending on what gives them comfort. So let me give you an example. I know, for example, Access Bank, for whatever reason, they decide they want to do 20% equity for those in diaspora. I know some other institution, I think Providence only does 10% equity. So it's all a case of what sort of comfort level each financial institution finds. So there is no broad-based criteria. So the most important thing here is this. Whichever financial institution that you are going to work with, they would assess your credit. Once they are comfortable that you have the means to be able to make your mortgage payments, what they will now do is they will just same way for a local resident, they will package your submission and pass it on to the MREIF. And MREIF will now disburse the money to them, and then they disburse the money to the developer, and then they would have the process. So I know for some the eligibility criteria, I don't have that. Every institution has it differently. Like I said, every institution has what their own liability threshold is, and so on the basis of which you can decide how it is. So, like I said, I've just given you. I know AG Mortgage does it, Providence Bank does it, Access Bank does it. So those are three institutions on the MREIF approved list that you can actually reach out to find out how it is that they do such.
Okay, thank you very much for that question, Ola, and I hope your question has been answered. So I'm just going to open the floor for anyone that wants to unmute to ask any questions before I go ahead to read out the questions that we have in the chat at the moment. So if you have any questions, just can signify by using the reaction to raise hands so that I can call. Does anybody have any questions for Mr. Tola, or need any more clarification on the mortgage and the MREIF? Okay. All right. So I guess along the line, if anybody has any questions, you can raise their hands, and then I'll call. Okay, so the next question here. Okay. Hi, Temitope.
Hello. Good afternoon. Sorry. Good afternoon. Good morning. Oh, thank you, Mr. Tola, for this enlightenment. I'm just hearing about Ule Homes, and I came in like 11:28. Can you just summarize what you just said about the mortgage?
Is there going to be a replay? I think if there's
Oh
going
yeah,
to be a
replay,
there's a recording. There's a
yeah.
recording of this.
So if there's going to be a replay, I think it's better you actually listen to the
okay,
replay.
because
Yeah.
I want to know more.
Okay. Okay. Yeah, I think the replay will be made available to you, so you'll be able to. Yeah, because I can't crash everything into a short speech. Yeah. Yeah.
Yeah.
Yeah.
So I just want to know, because I'm careful, because information is very, very important. There are some things you just said now.
Hello.
About
We can't hear you
banks
anymore.
giving mortgage to diaspora. I've never heard. Hello, can
You can
hear
hear
me
you
right
now.
now? Can you hear me? Okay. There's something you just said about Providence Bank and one bank giving. I've never heard it before.
Okay.
Information. We all do before. If you don't sit down and be doing, we went to school, we do this, and we don't have information. Information is the key. So I really like both. Can you just tell me about a little bit?
Let's just a quick one. Like I said, with regards to diaspora mortgage, there are already certain financial institutions that do diaspora mortgage, and I just listed 3 that are on the MREIF approved financial institutions that currently do diaspora mortgage. That's Access Bank, Providence Bank, and then AG Mortgage. So I know they do diaspora mortgage. So what I just said is that look, it would be good if you can reach out. If you're in the diaspora, you can reach out to any of these financial institutions to find out their criteria, because every financial institution has different criteria. Like I just explained to you, Access Bank would require 20% equity contribution, whereas I think probably AG Mortgage and I think probably they do 10% equity contribution. So each financial institution has its own criteria. So I cannot give you a broad-based criteria. Oh, these are the things which they ask for. The only thing I would say is that shop with each one, every one of them, whichever one you like, decide on it. The beauty about it is that look, every one of them is going to MREIF. So it's not a case of it's only I've given you 3 people who are in 3 institutions who are all going to MREIF. So you're covered with each one, any one of them. Whichever one of them gives you terms that you like, work with that one and just carry on. MREIF, like I said, MREIF is not directly giving you. MREIF is giving to you through the financial institution. But they are funding the financial institution. So whichever of the financial institutions you like, works for you. Yeah.
Okay.
All right.
Thank you so much, sir. I'm very, very grateful.
Yeah, you're welcome. Thank you.
Okay. So I would also like to reiterate that yes, MREIF is giving funds, but with the financial institutions, for example, Ule Homes, we also help to facilitate the process. So obviously, that's one of the reasons why Ule Homes is in the market. Ule Homes is here to finance your rent and also help you to own your own home. Just need to put it out there. Okay, so somebody is asking for your email, Mr. Tola. Okay, so all this is going to be available to everyone that registered, both the link to the recording, anything. We're going to provide all of this to.
Let's
Okay,
do it
Mr. Tola,
this
go
way.
ahead.
The
Okay.
best way you can reach out to me, just search for my name on LinkedIn. Just send me a direct message. I respond to people. And don't worry, I respond directly. I'm the one who responds to all those messages. So just find me on LinkedIn and whatever questions ask.
Yes, so you respond directly. It has an open out. You respond directly.
All right, thank you very much, Shola. Just so that there is a bit of coordination, would appreciate it if you raise your hands before you speak. Thank you. All right. So we have Samuel's hands up. Hi, Samuel. Can you hear me? Okay, we have a couple more hands up. Samuel, if you can hear me, you can unmute and speak. Okay. We can go ahead to Joshua. Joshua, please go on. Joshua Enakahiri. Hello?
Good afternoon. Can you hear me?
Yes, we can. Good afternoon.
Yes.
Okay, great. I think I'm among the people that came in late, got this link on a WhatsApp group I'm on. So I think my question is, how do I then get the recording?
Okay. So it's going to be available on our social media, if that's the case. Ule Homes _ on Instagram, on LinkedIn is Ule Homes. So if you find us, we are going to share you all of the details. That's if you didn't register, right?
Okay, so it's what? Homes again?
ULE Homes.
UNE.
Let me send it to you.
UNE
ULE
Homes.
Homes.
Yes, you can just put it on the chart or something.
Yeah.
Thanks a lot.
Okay. Okay, great. Awesome. Okay, so Malaka, Kenneth, please go ahead.
Malgus, good morning. How's everybody doing?
Good,
Okay.
thank you.
Yeah, so I jumped on this very late, but I have some questions. So, I
Please
mean,
go ahead.
the catch that got me here was I saw 100 million naira to get your home or something like that of that nature. So, what are the limitations around the money that you're getting? So, is it only specified to get your home, or when you're giving the money, you could buy land and flip? I mean, what are the regulations around it, or is it supposed to be channeled through just um, landing properties or so? I mean, I just need to understand a lot
Okay.
more about that part.
Okay. So long and short of it is you can only use it to buy a property, a house. You can't use it to buy land. That's the long and short of it. Yeah.
Okay, that makes sense. Yes.
Okay.
Okay, thank you. I think that's all I
Okay.
All
needed
right,
to know.
Thank you.
thank you. Thank you, Kenneth. All right, so Elvis, please go ahead. Hi, Elvis.
Hi.
Okay.
Yeah, good morning. Good morning. Good morning, everyone. So I was one of the people that joined late. I saw the group link late. So while I joined, I listened to something. I want to get it clearly. So I like to, because I'm into real estate, and I want to get and understand
Okay.
how this helps my client get properties. So let's say someone sees, yeah, various development projects right now. A lot of companies are building projects, and some are doing it offline. So, and the idea is that they are supposed to build probably 2 or 3 bedroom or 4 bedroom apartment for sale at some point. So, can someone? I think I don't know whether that was what I was hearing. Can someone see? So someone sees the deal, but it doesn't have all the money, and can still pay 10% of the value of the offline deal. So still securing the deal, but he doesn't have all the money. Does that really work? Like the person, let's say the deal is at offline sale. It was maybe, let's say the property is worth 50 million or 75, and he can commit just the 10% value of the to secure the deal. Then the I think I was hearing where the company can come back later and
Okay.
finance the whole purchase. So I don't really get
Okay.
it clearly.
Okay,
Right?
Elvis, let me see if I understand what you're just asking. You're asking how you can use this, especially with regards to an off-plan construction project.
Yes,
Would I be
yes,
right to say that?
yes,
Okay,
yes.
good. So let me try and explain it. The most important thing, that's why when I listed out my 7 steps to accessing mortgages, you need to work with a developer that is willing to operate under this sort of approach. Because if you want to work with a developer and you want to get mortgage for a developer that is off play, that means the developer must be willing to take just 10% and get the balance for the property when the property is near completion. And what I had said is that there are certain institutions that actually do that. Like I said, not to go on the soapbox for my institution I work with, Mixed Africa, but that's something which you actually do. And let me run through how the process works. So we start a project today. We're saying, okay, this project is going to be delivered, let's say in 9 months, whatever the 9 months. We start a pre-sale process. During the pre-sale process, let's say month 1, a client commits to saying that, look, today I'm interested in this property, I'm going to buy this property. So what we do is we issue the client an offer letter. On the offer letter, we'll tell the client that, look, okay, we're giving you this property on the basis of number 1, you're going to get a mortgage, and then the 10% equity. Let's say we tell you that you're going to pay the 10% equity in 6 months. With that offer letter, the client now goes to the financial institutions and basically tells the financial institution that, look, I have this property I'm going to be buying. This is the offer letter. Now, because the financial institutions are familiar with us as developers, So that reputation is there that, okay, this developer is going to deliver in terms of whatever timeline, whatever the product quality is going to deliver. So what they do is they start assessing the buyer based on the credibility of the developer. So let's imagine that whole assessment process takes 4 months. The buyer pays his equity contribution in 6 months. The bank will still not disburse. What they will do is they will wait until the property is substantially completed. So let's say by month 8, let's say the property has hit maybe like 90% completion. Then they can now send their valuer. The valuer values the property and says that, okay, the 90% mortgage that I want to issue, the value of the property is more than 90%. Based on that, they will now issue a letter to the client that, okay, we are approving you for credit. We will now forward your details to MREIF. They now send the details to MREIF. MREIF disburses to the bank, and then the bank now pays the developer. So that's the way in which you would work in an off-plan situation. But the most important thing is you have to work with a developer that is willing to commit their own funds towards construction, so that you only pay 10%. So because I know not all developers will do that. There are some developers who will tell you that, look, you need to make significant payments during the construction period because I don't want to take the risk of having to fund that property. So the most important thing is finding a developer that is friendly to those sort of terms, that allows you to pay just 10% during the construction, and then the balance would only be given when the property is significantly completed.
Okay. So, okay, I actually have lots of relationship with developers
Okay.
here in Lagos. Yeah. So,
Okay.
and I don't think I don't think many of them know about this model that 10% can. But what they do most of the time is they could spread the payment. You pay initial payment of 50%, and spread it along
I know.
5 to 6
I know.
months.
The only developers that can do that is developers that have capital to be able to deploy for long-term purposes. So, for most, the story we always tell ourselves that everybody's a developer. Today, all you need to do is you have some small money, then you start a development, you're already a developer. Of course, based on that, you basically want to leverage on people making contributions over the life of your construction so that you keep up to your
Very true.
construction. Yeah, that's the typical practice. But if you find developers of scale who have at least a little bit more backbone, they are the ones who will be willing to, extend more or less. They are giving credits to the buyer without no interest, saying that they are committing to construction whilst the buyer is only making their equity contribution of just 10%. Yeah.
Okay. I would message you on LinkedIn so we talk more on this.
Okay, no problem. Noted. This
Thank
guy is already taking action. It's not even
you. I'm
wasting
an
time.
actual person. I don't delay for any moment.
Okay, no
Okay.
problem. Noted.
Yes. Okay.
Noted.
Thank you
Yeah.
very much.
Yeah.
And just for emphasis, Elvis, Ule Homes, we help with the mortgage part of things. And since you say you
Definitely,
have
I
a
know.
lot of offers, so you can also reach out to us and see how we could help you on that front. All
Yeah.
right, Samuel. Okay, Samuel, are you back?
Yes, I am. Hello, good morning.
Hi, good morning. Please go ahead with your question.
Yes, I have two questions. The first one is on the sustainability of the program. I know Mr. Taylor touched on it, where he compared it with pension fund. Even though I don't share the same sentiment, I don't think you can compare MREIF with the pension fund. Pension fund is a contributory scheme. MREIF is a loan. I can compare it with, say, CBN Sci-Fi loan that started in 2019, 2020. It was a loan that was meant for creative industry. Yeah, and it was at less than 10%. But then there was a new government came into power and then stopped the scheme. Is there a I'm sure there's a possibility that within the next 20 years, there might be a new government that will come in and say, okay, because it happens. We don't have power over government-backed programs like this. So is there any assurance, is there any possibility that before the 20 years expires, there's going to be something that would happen? And because if it happens, it means that those clients who have to pay those loans will be thrown into a situation where they didn't plan for. Say maybe the rates increases or something happens and it's beyond their plan. That's question number one. I don't want to answer that.
You want me to respond to that first?
Yes, please.
Okay, before I respond to that, I'd like to ask you a question. What is your fear about, and this does not in any way prejudge the answers I'm going to give to you, but I'd like to ask it, what is your fear about the scheme not like, let's imagine you have been issued a facility under the scheme today. If the scheme doesn't last for the 20 years, what is your fear about that? I just want to understand, just to be sure that I'm addressing the right question. What's your fear about that?
The fear is for long-term financing plan. If I've already planned that a particular amount is going to be deducted from my account every month for the next 20 years based on the repayment
Yeah, I
schedule.
get what you're saying. So
then
what you're
something
saying,
happens
so
and it changes that.
let me quickly jump in so that I'm sure. So what you are afraid is that, okay, tomorrow they might decide they want to cancel it and they say that all the mortgages they've issued, everybody should go and repay it immediately, right?
Yes, or the rate increases, or they increase the rate.
Okay, good. So let me address number one. Considering the fact that you know that politicians are always trying to score cheap points to report success, do you think it is in any politician's interest to tell you that, for example, let's imagine you expect you are going to make the money, you are going to pay the money in 20 years. Do you think it's in any politician's interest to now say that that money you should have been paid, you should be paying in 20 years? Today, we are stopping, you must repay everything. Do you think it's in any politician's interest? That's number one. And it's not that I'm expecting you to answer that question. It's just, so let me explain in terms of how the structure of this fund operates. Number one thing which was done in the setup of the fund was to hide it completely outside of government oversight, which was the reason why you made it a SEC registered fund. So like all the typical, just think of it as any of your traditional instruments, whether it's a money market fund, your equity fund, whichever one of them, any one of those funds that you basically have, which is regulated by SEC. And you already know that because those funds are regulated by SEC, there is no fund manager that can just come up today and just decide that, okay, today I don't want to do this fund, I'm canceling this fund today. Why? Because there are SEC regulations, SEC rules that guide the operation of such instruments. And that's one of the reasons why, there are two, it was very important that, look, you create that, as it were, Chinese wall between, yes, you are receiving government support for the initiative and the day-to-day operation of that fund. It was very, very much important. And that's the reason why it's registered under SEC. It follows the rules and guidelines of SEC, which is why I'm not sure if you were part of the presentation when I was explaining to you that, look, just the same way that your traditional fund is required to have trustees, fund manager, custodian.
Yes, I didn't have. Yeah, my friends.
Hi, Emmanuel.
Sorry, I think you need to mute him.
Hi, Emmanuel.
Okay, so let me go.
Yes.
So the only basis that I can agree with you that the SEC structure is not going to work is if the SEC structure has not worked for other funds. That one day somebody is just going to get up and just tell that SEC, okay, SEC, because I don't like this fund anymore, I want SEC to, and let me run you through some of the things that the fund is structured to do. Like I told you, this current run of the fund is supposed to be 1 trillion. We've only done a raise of about 250 billion. Now, the plan is that, look, you are going to have multiple tranche raises. And the rest of the multiple tranche raises, you are not only going to be looking at institutional investors, you're going to be, so I'll just give you headline ideas. So there are plans to have a DFI funding tranche, whereby, for example, you're going to have specific international agencies that provide intervention in housing. They will invest in that tranche. You're going to have, for example, if you have specialized institutional investors, like maybe, for example, Sharia funds, international Sharia funds, you would have a specialized tranche for them. So the whole idea here is that you're trying to create a fund that does not lean on the government for long-term sustainability in terms of funding. Yes, you've gotten seed capital from the government to effectively start and crystallize it, but you're not going to be running it on the whims and caprices of, oh, government, they give us this additional funding. Like I tried to explain in the presentation, you had the 250 billion. Government brought 150 billion. private sector was supposed to bring 100 billion. They brought more than 100 billion. That tranche was oversubscribed. And you're talking about your PFAs, your commercial bank, your insurance institution. So the way in which I see it, nothing is impossible in the world that we live in. Somebody can come and make a declaration, but the likelihood that there are too many things that would have to break for it to happen. Like I said, it operates under a SEC structure. So number one, you have to break that whole SEC structure. And so if you break, let me tell you, if you break that SEC structure for the MREIF, then it creates a multiplier ripple effect that everybody's going to be afraid that, look, oh, the rest of the funds that everybody else is doing under SEC structure, is there a possibility that somebody too one day is going to come and wipe out that structure? So there's a multiplier effect it's going to have in the economy, which you are not going to want to introduce in the market. So I don't think that is going to happen. I mean, maybe I'm too optimistic because I'm too close to the ground, but those are some of the levers we try to introduce when we were trying to structure out this fund.
I understand that. Thank you. Thank you for your answer.
Okay, sir. Yeah, thank you.
All right. Second question.
Yes,
so I understand. I love the MREIF project. It's not the first time I'm hearing about it. Just to put that out there.
Okay.
And I understand that it is doing a good job helping people own homes. But my issue is there's a larger market of people who just want to rent homes because they don't have the capital. I mean, if you say you're giving me 100 million naira and I have to bring not 100 million naira, a property is worth 100 million naira, I have to bring 10%. It means the loan amount is 90 million, right? How many Nigerians today can afford first 10 million equity contribution and then have to pay 90 million over 20 years? I think based on the market that there are more people who would rather want to pay rent. There are more people in the rental space than in home ownership space. What I'm saying is there a possibility for MREIF to fund rental apartments? It happens in the US, for example, where you build a rental apartment, let's say of 20 apartments, and then you mortgage it. The rental income pays the mortgage. So the bank is secure, the property developer is secure, the clients are secure. Is there a possibility of this happening in future such that MREIF can fund rental apartments so that we can cover more ground and cover more people or more clients? So you have a rental apartment of less 20 apartments. The apartment is mortgaged by MREIF with the same rate, same everything, such that we can cover more people and help more people to have good homes.
Okay. Good. Thank you very much for that question. First and foremost, this is a question I've had to engage with people on, and that's the fact that the MREIF is not a silver bullet to address all housing issues. The MREIF is just a bullet to address a particular housing issue, and that is home ownership impossibility due to the lack of affordable mortgages. That's what the MREIF is currently addressing. Now, to your other point about rental, yes, there are talks ongoing to also try to come up with something that would also act as an intervention to that side. So that's all I will tell you about that. But I do agree with you. There's a need for multiple layers of intervention in the housing sector to be able to address the different problems at different levels. And I do agree with you. It's not everybody who is in the position to buy a house. One of the things I tell people is that, look, because of the inflation that has happened over the last two and a half years, what you've ended up having is that you've ended up seeing salary income significantly lag behind rental housing prices. And so what I tell people is that my own assessment is that for certain industries, salary income may not fully catch up to property prices until maybe 5 years. For some, it may go as far as maybe like 10 years. And so you ask yourself a question, in that intervening period, what can be done during that intervening period? So MREIF is an intervention addressing mortgages. There will probably need for interventions to address the points that you have raised, and there are thoughts that are already in line with that. So that's the feedback I would give to you on that.
Thank you very much.
Okay.
Okay, we have Ambrose hands up. Please go ahead. Ambrose, are you there? Okay. I think we'll just go ahead to keep asking more questions. Mr. Tola, I hope you're not too exhausted because the questions keep coming back to back.
No problem. No problem. I'm good.
All right, thank you. Ambrose, if you come or if you can hear us, you can unmute. But if you can't, I'm just going to go ahead to read out the other questions that are here. So Gift says, a question is, beyond the interest rates, what are all the associated upfront and recurring costs, for example, processing fees, legal fees, valuation fees, insurance, that a borrower must budget for?
Okay, I will just give you headline information of what I know for a number of the financial institutions. They try not to be too far from each other. So yes, there's going to be a valuer assessment fee. What typically happens is that in certain cases whereby a financial institution has a relationship with a particular developer, what they may probably do is they may be able to bring down the valuation fee, whereby all they do is they just do one valuation of one property and just use memorandum to just sort of spread that same cost on all the properties. So that valuation fee, it might be negotiable depending on the type of relationship that financial institution has with the developer. So it might be negotiable. Then you have your legal fees, which covers things like trying to search for the title of the property to be sure that the developer has title and all those sort of things. That too might be negotiable, especially if you are working with a developer that has a pre-existing relationship with a financial institution. They might be able to bring it down. The other fees which you might not be able to bring down is fees like the insurance that you need to take just to cover in the event that, look, for example, let's say you have the challenge at work and you need to be able to cover your mortgage payments at least. I think sometimes like within about 6 months, and the plan is that during that 6 months, you should have been able to get a new property. So there is that. And what will typically happen is that your insurer, your financial institution will want you to keep on updating those sort of insurance, just to give them assurance that in the event that something happens, at least there's cover. And then there are times in which they may ask you to actually take a term life loan, term life insurance. That's in the event of maybe there's critical illness, death, or whatever it is, that at least there's something which they can fall back on to be able to cover whatever facility that you have with them. Those are some of the fees that I'm familiar with. There may be additional fees. Like I said, each financial institution might have specific fees, but they are not usually far away from each other. But those are some of the fees you should prepare yourself for.
Okay. So for reiteration, Lay Homes as a financial institution, if you have more questions on that, you can definitely reach out to us. And I've also sent out, put in the chat box, the links to our social media handles and even the links to apply for either rent financing or mortgage. So if you have more questions, you can also feel free to reach out to us. And as Mr. Tola has mentioned, his LinkedIn is open and he can respond when you send him a message. Okay, there's a question from Yomi that I feel we've not really touched on. What's the typical end-to-end timeline for a successful mortgage application under the MREIF scheme from initial application submission to fund disbursement, assuming all documents are in order?
Okay, so I like that question. So one of the feedback that I got from a lot of financial institutions, they will tell you that, look, if all your documentation is in order and the developer does not have any complicated titles or whatever, usually they can complete their assessment within, I think about 6 maximum. I think worst case they said 6 weeks, between 3 to 6 weeks. So let's imagine you have all your documentation, everything which they need, and you don't have a complicated arrangement. Even for most of the financial institutions that do mortgage, they already have a relationship at the lands registry that allows them to fast track their process for validating title that the developer says he has. So that typically your assessment criteria and all those things can take anything between 3 to 6 weeks. So let's say you complete that process in 3 to 6 weeks. In terms of them accessing funding from MREIF, it takes about 1 month. The MREIF does it about 1 week. You know, the beauty about MREIF is that they've done the pre-qualification for the financial institution. They know the maximum amount the financial institution can access under the scheme. And so for them, when the financial institution sends a request for disbursement, they just confirm that, okay, you are within the limits that we've already given to you. And once you are within the limits, they already have the funds, they disburse to him. So disbursement can take about 1 week. So that means give or take plus 6 weeks plus 1 week, give or take in about 2 months. If you have all your documentation in place and it's not anything complicated, you can actually have your mortgage in about 2 months.
Okay. Thank you very much. Yomi, I hope that answers your question. Okay, so one more question, and okay, let's take one more question. Are the monthly repayments fixed for the full 20 years, or can they increase in interest if interest rates changes? Also, after paying the 10% down, do I immediately get ownership or title of the house, or only after the 20-year repayment is complete? This is a question from Emmanuel.
Okay, so first and foremost, when you sign the loan agreement, when you sign the mortgage is a fixed rate mortgage. The only time whereby there was a change in that was simply because of the initial start of the facility. So, at the start of the facility, at the start of the MREIF, when they were still trying to address certain levers and everything. So the initial rate of the mortgage was 12%. I think about a month or two later, they were able to get it down to about 9.75%. And once they did that, so they issued out some mortgages in July. Because the time was very, very close to it, they rebased the on-lending arrangement that they had with the financial institutions, such that they told the financial institution that, okay, we are also reducing your rate. So based on reducing your rate, you should also bring down your rate. So interestingly, I actually had someone who reached out to me in August saying that, oh, I got a mortgage in July using the 12%. Does that mean I miss out on this? And I said, no, automatically you get hit with the revised rate going forward. And he came back to tell me later on that, look, his mortgage bank was saying no, that they were not going to revise. I said, oh, that's pretty easy. I spoke with the fund manager. The fund manager told him, send your details to us. They sent his details to us, and then they spoke with the mortgage institution. And by that August, when he was making his repayment, it was already at 9.75. That's simply because this was at the start of the whole thing where they were trying to still get it. But once you enter based on a particular fixed term, that's the fixed term that's going to last for the life of your. So at least you have assurance and confidence that you're not going to have fluctuations in what you're going to be making repayments on. So I think that addresses your question. I know there was a second part to that question. I can't seem to.
Okay. The second part says, do I immediately get ownership of the house, or only after 20 years repayment is complete?
So the mortgage agreement that you have is going to be a tripartite mortgage agreement between the bank, the MREIF, and you. So the way it is that, look, since the bank has provided you 90% through MREIF to fund your property, the legal mortgage that is registered is going to be registered with all three of you covered. So in terms of title ownership, really is more or less the three of you that own that title, if I can put it that way. So the way it is that if in the events that they need to sell the property for whatever reason, they're simply saying that it is only after they have settled the bank and MREIF that the balance comes to you. So the full title, whereby you get 100% ownership of that property, does not come to you until full payment of the 90% balance is made to the financial institution. I believe that answers your question.
Okay, Emmanuel, I hope that answers. Okay, good. You already gave a reaction. Okay, so there was one more question that somebody had. I was just going to ask the question, even though you touched on it a bit. Okay, so how will the fund ensure continued government support and private sector participation, especially if Nigeria's economic conditions become more volatile? With MREIF focusing on providing long-term affordable funding, what is being done to address other significant barriers to home ownership, like land acquisition, documentation costs, and the general lack of affordable housing units in the market?
Do you want me to write a thesis for you? Because
oh my goodness.
you just basically threw a wrench in everything. You want me to try to. So let me run you through. Like I said, the MREIF is not a silver bullet to address all housing problem. It is just a bullet to address the lack of affordable mortgages. Yes, I agree with you that there are bigger issues that impact the ability of people to actually get property ownership. I mean, to get on the property ownership ladder. Of course, number one is the prices of the homes. But of course, the prices of the homes does not exist in isolation. It exists because the inflation generally in the economy has gone significantly higher. So, to the point which I was trying to make earlier on, that I said that look, at the point where we currently are is that look, the gap between most people's incomes and prices generally is not only restricted to just properties, but generally everything. You could be looking at least 5 years before you see a correction, meaning that your salary will need a bit of time to grow at the pace for you to significantly catch up with how property prices have moved. That's the reality of it. And what I can say is that MREIF cannot solve that problem. That one is certain. The only thing MREIF is trying to do, so let me try and run you to some of the things that MREIF is trying to do. MREIF on its part is trying to act like I won't call it a pressure group, but it's trying to act like an intervention partner, working with different government and institutional agencies. So like I mentioned to the point about it and trying to engage with state governments to try and introduce digital registry. There are also plans to also, as the scale of mortgages continue to increase, what we are seeing would be a basis for you to try and encourage key manufacturers of key components within the value chain for house construction, opportunities for them to look at the scale opportunity and use it as a basis for reducing their price in terms of how it forms an input. So yes, long and short is that in the immediate, there's only very little that MREIF can do to address all the problems that you have within the housing sector. They would only be able to do what it is that they are fully equipped to provide mortgages. The others, you would have to see not only MREIF engagement with different government agencies, but also different interventions. Like I mentioned, I think it was Samuel that asked the question when I told him that, yes, there are plans in the future to be able to introduce maybe something to cover, to address rent challenges and things like that. So there are different levels of intervention that we will need. MREIF cannot be the be-all, solve-all for all the issues that we have in housing. That's the answer I will provide to you. So I think the most important thing is let's keep on engaging so that we keep on seeing the possible interventions that we can introduce to address some of these challenges that we see, whilst we live under the macroeconomic challenges that you have. Yeah.
Right. Thank you very much. I think that would be the end of all the questions that we have to take. Thank you for creating the time and actually sitting down to explain in total how exactly this thing works. And we really appreciate it and we don't take you for granted. So once again, Mr. Tola is willing to answer your questions on LinkedIn. And we are Ule Homes at the same time. We are a financial rent financing company as well as we provide mortgage, obviously through MREIF as well. So if you want to get mortgage, if you have any property that you'd like us to finance, do well to reach out to us and then we can explain to you the processes. I've already shared in the chat the links to Ule Homes social media as well as the forms to fill if you want to apply for both rent financing or mortgage. So Mr. Tola, it's been a long ride with you today.
Thank you very much.
And we appreciate your time.
Yeah,
so hopefully we get to do it again, because it seems like these questions keep coming back, keep coming on, and I feel like our own DMs as well is also full. So in case there might be any, if you might be open to having another session with us, we would really appreciate it.
Okay, thank you very much.
Okay.
It's not where I promised, right? This is not where I promised. I make that promise at the back end, right?
Yes. Yes, we'll do that behind.
Okay, then. Yeah,
Okay.
thank you.
Thank you so much for your time. And thank you everyone for joining. You guys made the day for us. For your questions, they're also enlightening. It really shows that you have understanding of what's going on in the country. And I've also gotten to learn a lot from this session. So thank you everyone. That would be the end of our session. Have a beautiful day. Bye.
Bye. Thank you.